Hey, it's Sasha Evdokov, and thanks for joining me. In this video, I want to discuss some warning signs that you need to watch for where a stock may show you that it's in trouble. The first sign is that a stock could be in trouble, at least from what I see or what I watch, is that there's huge and heavy institutional selling. This means that the volume is coming in and it's huge to the downside. So you can see in this chart example where the volume is very, very heavy and it's to the downside. The stock is moving lower, the volume is coming in, it's heavy, it's huge, and it takes the stock lower. So this to me shows that a stock is in trouble, and you need to be mindful of your stops and either get out quickly or be prepared to short the stock. So be really cautious when you start seeing these large volume spikes and the stock is moving lower. A huge run in the stock is the second reason a stock could be in trouble. So be really cautious if you see a stock flying high to the moon, because you may be wondering, why would a stock be in trouble if it's moving really high, really fast? Well, there's always going to be a pullback eventually. Even the fantastic companies that explode and have a great, fantastic growth, usually they do retrace and they do pull back. And if you got a stock going straight up like a ladder or even straighter like a straight line, then you need to be really cautious because it will have a pullback soon because they all do. So be mindful of this and always peel into strength and sell into profits as the stock runs up in your favor. Quarter after quarter losses and time again, it's showing you that the company is losing would be a huge red flag to me. So if I'm watching the company's earnings, if I'm watching its profit reports in terms of the fundamental level, if that company is constantly losing money time and time again, this would be another issue and another red flag you need to be aware of and be careful because a company that's constantly losing money could eventually go to the ground in terms of its stock price or eventually get delisted or maybe even file for Chapter 9 bankruptcy and not even be a company. So be careful if a company has consistent losses time and time again. So unless they do something quick, you need to be careful and watch out for that stock. Now, 1 or 2 quarters that are bad, even 4 or 5, may not be a big deal. Just really depends on what the company's done before, the history of the company, what assets they have. But if they're consistently losing money quarter after quarter, be careful. The next reason is if a company is hugely in debt. If the company owes a lot of money, just like you owe money on a credit card, or maybe you owe money to somebody else like a friend, if you don't pay that money back, you're going to get a hurting. You're going to get a hurting whether on your interest rate on your credit card, or you may get hurt in terms of your friend coming over and saying, hey, what's going on? You got to pay me back my money. So the thing is you want to make sure that their debt on what the company owes, they're able to repay in some way or some form, whether that's in a couple years time frame or they're doing things to be able to repay that debt. If they don't do that, then again, the stock may be in trouble and could be in danger. It's a warning sign that you need to pay close attention to. Selling off a flagship product is the next biggest no-no, and a stock is in trouble. Why is that? Well, let's say I owned Apple. Let's say I owned the whole company. And now what I'm going to do is I'm going to sell my iPhone, iPads, and everything else to Samsung. And they're going to own my products for the iPhone and the iPads. These are key products. These are the flagship products that I own and make money off of. If a company is selling its flagship products, the products that they're making the most money on, the most profit on, to somebody else, this could be a warning sign. This could be a reason to be careful of, and danger is soon to come within the company. Of course, you won't see the sign in those big letters where, hey, we're Apple and we're going to sell the iPhone division to Samsung. But in retrospect, those are the kind of things you're watching out for. You want to see these subtle movements of, hey, we're taking what we used to have or what we have and we're selling it to our competitor or to somebody else because we need the cash or the capital, maybe to pay off debt. Big company cuts is the next warning sign and thing you need to watch out for in terms of the fundamental levels of a company. So if they're cutting jobs, if they're releasing people, they're doing major cuts within their business operations, then again, be careful of this because the company is being restructured. Things are being redone, and maybe that's setting up for something better, but it could also be setting up for something worse. So again, keep in mind that big company cuts, like cutting 1,000 or 2,000 jobs, could be a huge issue. Think of the General Motors days, right before it got delisted. They were cutting jobs. They were cutting jobs time and time again until they even got delisted off the stock market. So these are things to pay attention of, and they could be company-specific cuts, like to a manufacturing area, to maybe the labor force, to maybe their equipment that they're cutting and they're not using anymore. But big company cuts is another thing to pay close attention to. The next reason is if the senior management or the head gurus of the company are leaving, that's something to pay close attention to. It's why are they leaving? What's the reasoning behind it? And is the company going to be able to survive? Now, if Steve Jobs was alive, again, we'll use the Apple example, what would have happened if Steve Jobs said, hey, I'm leaving Apple, all of a sudden as their sales are rising or booming? Or what happens if Elon Musk says, hey, I'm leaving Tesla, I don't want to do this anymore? Red flags should kind of go off in your brain and wonder, why are they doing that? Why are they leaving? There must be some kind of issue with the company. So again, pay close attention to the senior management and what's going on with the senior management, whether that's people getting replaced, people getting fired and hired. Always pay close attention to that and see how the company is restructuring its business because these are all key critical components to its future success. And the last one we'll discuss is new auditors or auditing people being changed. See, public companies get audited all the time. In fact, probably yearly or every so often. They get audited systematically, which is not something that we're used to as regular individuals, but their books are usually being checked on a consistent basis by an outside firm, just to make sure things are in check, since all their earnings are public anyway, and since they have to report these things to their shareholders as they are a public company. The problem lies is when an auditor gets fired or there's disagreements with an auditor. So for example, the company states one thing and the auditor states another thing, and now they have a disagreement. So now this auditor leaves and they bring in a new auditor. And this can usually spell some trouble because what's happening is there's disagreements between the company and the original auditor. If everything was okay, the auditor would just come in and say, hey, your books look great, fantastic, you get a check mark or an A+, everything looks great, you're keeping track of your data and everything seems to be on par, time for me to go home and take care of things. But if there's disagreements between the record keeping and the books and the numbers don't match up and the company is disagreeing with the auditor, then this is a sign of trouble. So watch these things where if the auditor changes, if there's news announcements of they had to get a new auditor, again, it's a red flag that there could be some bookkeeping issues and another danger that you want to pay attention to. Okay, so there you have it. Those are some of those dangers that you need to watch out for. These are not everything that you need to watch out for, but this gives you a good starting point in terms of some of those risks or key principles of what to really look up and say, hey, this is a red flag, or hey, this doesn't look right, or this doesn't sound right. So if these things are happening, you need to be mindful and either get out of your stock and sell it, or just stay away from that company for a little bit until things have a little bit of time to digest. Now, just because a new company is bringing on a new CEO, it doesn't mean the stock will tank or it's a bad sign. It just could mean there's improvement and things like that. But always be careful and watch out for these things as they could become slight little signals to future events. Companies like to hide these types of things and downplay them. It's kind of like, hey, we reported a loss of 3.7%, but we gained 5% in this other division. They'll always end in a positive, and this is how you'll normally hear earnings reports, and the same thing with these types of things. So be mindful, watch closely, listen carefully, and see how it applies to you. These are the dangers that you need to be careful of when a company's reporting, when things are happening, and these are the things that you need to watch for as a stock is kind of rolling over or could change momentum. Thanks for watching. I hope you enjoyed this video. And if you're interested to see the stocks that I'm watching in the current market condition, then go ahead and sign up to my rapid recap by clicking this link right here and entering your name and email address on that website. And you'll get notified when I release my rapid recaps. And if you want to speed up your training in the stock market, if you want to learn quicker on how to trade stocks, how to be more profitable in the market, then check out some of my courses that teach you how to trade profitably on the market at tradersfly.com. Thanks for watching. I'm Sasha Evdokov, and remember to do what you love, contribute to others, and most importantly, live life abundantly. I'll see you next time.